So today we're talking about all things retirement, right? 401k, Roth, life insurance, so many different avenues that we can talk about. What I'm going to do is talk about the differences between each and how they kind of fit together. My name's Eddie Gartner with Epic Financial Strategies, and we are really going to focus on your retirement today. So let's start with the 401k. It's probably the most popular retirement vehicle out there today. It's very simple because if you work for a company and that company has a 401k, what you do is you set up a percentage of your salary to go into that 401k. It might be 3%, it might be 10%, whatever that number is, it becomes an automatic savings, something that you don't even have to think about, and that is constantly being done for you. So generally what happens is as people are in their working career, they're continuing to contribute to their 401k, and this is growing an account for them for later use in retirement. But there's some things you have to be aware of with 401k. I was just recently talking with somebody who, actually didn't even, thought that they had been contributing all along to the 401k, and it turns out they had never signed up with their company. So make sure that if your company does offer a 401k, that you're talking to them or speaking to HR, making sure those contributions are actually being put into the account. Next, you want to know, well, what is my time frame for retirement? Because if I'm retiring prior to 59 and a half, all the withdrawals from that account could be taxable, and there could be a penalty attached to them as well. The other thing you want to be aware of is when are you retiring, right? In the standard traditional type of 401k, the government puts in a rule that says if I take withdrawals prior to age 59 and a half, I'm going to be not only taxed on those withdrawals as income, but I'm also going to pay a 10% penalty. So if you're looking to retire before age 59 and a half, well then we need to do some additional planning. Next, I'm going to focus on a Roth account, right? What is a Roth account? Well, this is a savings vehicle, whether it's a Roth IRA or a Roth 401k. It's a vehicle that allows you to put in those contributions, but instead of them being deferred from tax, you're actually going to pay the taxes today. The nice thing about paying the taxes today is you get them over with, right? So that at a future date, when you're withdrawing money from that account, you're not going to pay any taxes. So you might be thinking, well, my company doesn't offer a Roth option on my 401k, and actually I earn too much money because they set up this really great Roth account that is income tax free on the back end, but they restrict how much you can put in depending on how much you make, right? So if you make too much money, you can't even contribute to that account. And you say, I would like something that functions similar to how a Roth would function. That's where we would look at cash value life insurance. Cash value life insurance can build in a similar manner where we're putting dollars in today and all of the growth can be deferred from tax. And when we actually pull the money out, we can take it out in a manner where we're not being charged income tax on that money. At the end of the day, what really matters is not 401k versus a Roth IRA versus life insurance. It's really how do those components all fit together in your financial mosaic. What we want to do is use all of these different tools that are in the toolbox to help us manage later in life and to give us options when we get to retirement. It's all about how we can create the most efficient income streams and how we're able to manage when I get into, my later years. Well, what if taxes are high? Well, maybe I want to pull from my tax-free accounts. But if tax rates are low, maybe I want to pull from the things that are taxable. By having different products and not just saving in one basket, one type of account, you're actually opening up the world to much better planning options when you reach that retirement destination age. With looking at all of these, right? You have your 401k, this is offered by your employer. Hopefully there's a match there and you're making your contributions up to whatever that limit is. It's really nice because it's going to be systematic and done every single time you get a paycheck. Your other option, obviously with the Roth IRA, is to be able to contribute, but yes, I get the taxes done with, and that's great because on the back end, I'm not going to pay income tax. However, you may earn too much money and you may not be able to contribute. With the life insurance, there's no income limitations, right? So it doesn't matter how much I earn, I can always be contributing to it. Not only does it function like a Roth, the life insurance also offers some other added benefits, which you can learn about up in this video here. So if you're looking for a way to see how all of these pieces are going to fit together for you, click the link below and you'll have access to our Epic Financial Freedom Map.